The most important signal this morning is not coming from stocks. It is coming from Bitcoin, and the reason is simple. Wall Street can close, but crypto does not. While the US stock market is still coming back from the Juneteenth holiday and the weekend, Bitcoin has already been trading, reacting, and sending a live warning before the Monday market open. At first, the market looked calmer. The oil shock cooled after the US-Iran headline. Risk assets tried to bounce, and Bitcoin pushed back toward the mid-60,000 area. But the move still has not confirmed a clean risk-on recovery, and that is the part traders should not ignore. Bitcoin is now sitting closer to the low 60,000 zone. This is not a crash, and it is not panic. But it is hesitation. And hesitation matters when the market is waiting for liquidity to return, because this is not only a Bitcoin story, this is a liquidity story. The latest Federal Reserve message was not what risk assets wanted to hear. Rates may not come down easily. Inflation is still a problem. And if the dollar and Treasury yields stay firm, assets that depend on easy liquidity have to prove themselves again. That includes Bitcoin, that includes gold, and that includes the most expensive parts of the stock market. The second warning is ETF flow. Spot Bitcoin ETF demand has not looked strong enough to erase the macro pressure. When institutional demand is quiet, Bitcoin has to rely more on short-term traders, and that makes every bounce more fragile. This is why a simple price bounce is not enough. The market needs confirmation from liquidity. So here is the calm metrics read. The headlines improved, oil pressure cooled, and stocks may look calm on the surface. But Bitcoin is saying, not so fast. If Bitcoin can reclaim the upper part of this weekend range, then risk appetite may return before Wall Street fully wakes up. But if Bitcoin keeps slipping while ETF demand stays weak, Monday's stock market open could be walking into a delayed warning. The question is not whether Bitcoin is bullish or bearish forever. The question is much simpler. Is this a real recovery or just a holiday bounce before liquidity wakes up?